Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. I've created a price target model for Tesla's stock price that, so far, I've used to give a bull case and a bear case, but I haven't actually yet created my own realistic price target for 2025. As much as I would like to depend on Elon and Tesla meeting all their objectives, we have to try and adjust to reality sometimes. As Elon says, it takes optimism to do what he does. If he didn't think he could achieve these objectives so ambitiously, despite often falling short, then it would be harder to do so without that motivation. And as a result, we've even coined a term known as Elon time. On the other hand, we saw the Model Y launch much earlier than expected, and now rumours circulating that the Cybertruck and semi-truck might be running earlier than we expected too. Now, what do I mean by a realistic price target? I guess really, we think of it as the most likely outcome. But what makes something likely? It's very subjective to analyse. So what about a price target that we can think of something that we can see Tesla very capable of reaching? A more than likely scenario, perhaps we might call it, tending on the side of pessimism if anything. So we hear all the time how Tesla is battery constrained, and my theory was that there wasn't really much point in ramping up battery production until they've got the 4680 manufacturing process sorted, which it sounds like they might possibly, as we're witnessing them opening up new lines for Panasonic in Giga Nevada. But either way, we're talking about 2025. So as far as I can tell, every battery that Tesla make or receive from their suppliers can be allocated into a product that will sell. And if at any time their demand does start to drop, they can simply lower prices and work on another way to further reduce costs, whilst at the same time improving features. So we need to estimate a likely rate of annual battery production that Tesla might have achieved by then. We've been given two numbers by Tesla, 100 gigawatt hours for 2022 and 3 terawatt hours for 2030. Although Elon expects to reach this level before then, according to what he said on Battery Day, he made out that this was an at the latest level of battery production. Now, yes, this is battery production as in-house Tesla production, not total battery supply. We also get told Tesla will achieve 50% growth. Now, at consistent 53% a year growth, that 100 gigawatt hours would become 3 terawatt hours by 2030, as shown in this table. And 2025 comes in at 358 gigawatt hours, despite us hearing claims that Berlin alone is going to achieve 250 gigawatt hours, let alone Texas should surpass even that. And imagine how quickly Tesla can put up a new 4680 battery line, or machine that makes the machine. Think of the supply chain achieved by then too. So if Tesla are able to reach 358 gigawatt hours themselves, according to our table, then what about the 3 largest battery makers on the planet? With an order from Tesla saying, "We will buy everything you make." Panasonic alone in the Giga Nevada factory has enough capacity to manufacture 200 to 300 gigawatt hours of 4680 batteries. So let's scale it back a bit. Let's say, collectively, the other 3 can do as much as Tesla alone and round the total number of batteries to 700 gigawatt hours for 2025. I'm quite happy with the prices I already chose in my previous models. They're approximately discounted 10% from today's price, and we're not factoring in inflation. My thoughts are that Tesla would have cut so many costs by this stage. At this stage, more consumers would realise that Teslas have a very low rate of depreciation, if any, which is the single largest cost of owning a car. It's also the one reason I've never purchased a brand new car in my life. Yet, I've put down deposits on 3 Teslas. It will be more widely known how much Teslas cost to run, or how little I should say, by 2025. Also about how safe they are. Consumers see a lot of value in safety. All the issues with Tesla's build quality and panel gaps should be long gone by this stage, and now known as the best quality built car on the planet, likely due to advances with die-cast machines. Okay, so we're going to accept the fact that every single car they build still gets sold. So we have 700 gigawatt hours of batteries to allocate over the whole company. Although I'm sure there have been many more amazing refreshes with the Model S and X, perhaps demand has fallen somewhat. The luxury market is really the only chance any other vehicle has to compete due to the fact that the price points are so high. Other manufacturers will actually be able to sell their cars and justify the cost of the battery. Production will be at lower levels, so ramping up at a scale isn't such a necessity. And people with money like to stand out. So it's possible the likes of Lucid Autos might be around. Perhaps Bentley or Rolls-Royce or even Lamborghini manage to make it possibly too. Of course, it's likely the competitors won't have level 5 autonomy at this stage, nor the level of performance or range of the Tesla. But that's not everything to everyone. In addition to that, some people have more money than sense. Hey, and if Tesla goes up much more, I might be one of those people too, although I'd still likely just buy a Tesla. Anyway, I'm going to put Model S and X at 100,000 units. Perhaps Tesla wouldn't want to encourage too many S and X sales anyway, as the batteries can be better utilised in other models more appropriate for robotaxis. This is still more sales than 2020 at just over 50,000 from that year. I'm going to give a Model 3 and Y at Fremont a 50% increase in capacity from today and split the numbers evenly at 325,000 each. I'm going to give Shanghai a 30% increase in production, a total of 585,000, and split them in proportion to the current capacity. I'm giving Berlin 1.3 million vehicles, 1 million Ys and 300,000 Model 3s. I'm going to give Texas just over 1.5 million vehicles in total. I think Tesla have to take the Model 2 seriously if they want to achieve those robotaxi numbers, so we will use 2 million a year for Model 2. And in addition to that, we'll add 2 more small factories, each doing 500,000 a year. So I'm trying to best allocate these numbers where they need to be for demand, as we will still be constrained with batteries, even though I'm sure Tesla are more than capable of creating larger capacity with their manufacturing. And I think if Tesla are adding all these extra EVs into the market, it will be putting more pressure onto the electrical grid, and Tesla need to start building their energy business in unison with their EVs, or the resulting consequence will be more gas power plants, which is not ideal. Anyway, this comes in at a total of 7.2 million cars for 2025, which is actually quite a nice number. It fits in close enough to where Tesla would be with 50% growth after 2022, which is 6.75 million. So we're only off by 6%. It also comes in at a total of 457 gigawatt hours of batteries, which then leaves us 243 gigawatt hours for energy. I think 30% margin is probably close enough. Remember, FSD is in addition to this still, giving us revenue of $291 billion and a gross profit of $87 billion. So we thought 243 gigawatt hours remaining for energy. I have Powerwalls at 2 million sales a year, consuming 27 gigawatt hours, but I've taken the price down from about 12,000 for a Powerwall to 7,000, and 4 million solar installations, which is twice as many as Tesla's Powerwalls. This is about half as many solar installations to cover the auto sales for charging. And we're going to go with 2,000 megapacks. Whenever I do these megapack numbers, I always feel like it's so many batteries, but this is a big part of the future of the business. If we're going to transition to renewable energy, then we need an enormous number of megapacks. 2,000 a year isn't even close to what's required. And let's say the heat pump business is growing and are at 200,000 sales. It's not a huge money maker relative to the rest anyway. Taking energy to a gross profit of $35 billion. I'm going to stick with today's price of FSD of $10,000, with 15% of Tesla owners ordering and 40% being deferred revenue, due to Tesla releasing more features. Yes, there's a good chance that Tesla have hit level 5 by this stage. But in a way, using 40% deferred revenue factors in a 60% chance that we are there, but whilst also still being able to realise that 60% as revenue. So it's a great way to model FSD. For robotaxis, we'll be assuming 15% of Teslas have joined the fleet at this stage, and we're going to go with 14.5 million Teslas on the road. Wow, I love this model, how it just worked it out for us. I think it will still be early days for robotaxi, if it's running, and the 15% will likely increase quite rapidly, possibly due to entrepreneurs purchasing large fleets as a business, and Tesla owners including their aged Teslas into the fleet, not to mention Tesla purchasing their own robotaxis to join the fleet. But we come in at $50 billion gross profit for Tesla for the robotaxi business. I'm going to go for 30% of Tesla owners having insurance, due to the fact it's possible Tesla aren't offering insurance worldwide. Anyway, insurance is a small money earner. And regulatory credits. Although it's not an income we can depend on, I'm actually going to include $2 billion of regulatory credits, as I feel it likely that Tesla will be generating some income from internal combustion manufacturers not complying to standards. I am, however, going to exclude any capital appreciation from Bitcoin. Yes, there's a chance Bitcoin could have hit $300,000 by that stage. But what's that? About $15 billion or so, added onto Tesla's market cap, and highly speculative. Anyway, we get revenue of nearly $1.5 trillion and gross profits of $180 billion. I think Tesla probably want to invest significantly still in R&D, so I'm going to include $10 billion a year for that. I've put a capital investment at $6 billion, as they still have a lot of battery factories to build, and will likely be purchasing some cars for their robotaxi network. Sales, general admin, I've included what I feel a conservative $8 billion. Total costs coming to $24 billion. I'm using a 21% tax rate, giving a net profit of $125 billion. To be honest, it's too hard to call whether or not robotaxis will be live at this stage, so I want to break it up into two price targets. I've created a value of the robotaxi business with a PE ratio of 100. I'm sure a lot of you will argue that's too low, given that they're only at $40 billion profit at this stage, but feel free to run your own model with any PE you like. And I'm placing a PE of 40 on the rest of the business. Again, I'm sure many of you think that is low, but also bear in mind, all PE ratios right now are historically high due to such low interest rates. We can't assume that interest rates will remain this low, and if we go by history, we can almost guarantee they will not. Deflationary periods always follow inflationary periods, implying interest rates will have to rise. Anyway, I give the robotaxi business a valuation of $4 trillion and the rest of Tesla $3.5 trillion, giving us a price target of $7,500 for the business with robotaxis, or $3,500 without. I am, however, leaning towards a 60% chance that we will have robotaxis at this stage in this model. So if you want a single price target, we can add a 60% weighting on the side of the business. If we did that, it would come in at $6,000. So there you have it. This is my price target for Tesla in 2025. Now we just need to keep an eye on the battery supply to see how within pace Tesla are with our model. Thanks for listening. Please hit the thumbs up and don't forget to subscribe.